Welcome to the Abroad in America podcast, the only financial podcast designed specifically for expats living in America, where you go behind the scenes with financial planner, author, and speaker Jimmy Miller to learn how to make your time in America as financially rewarding as possible. And now, here's your host, Jimmy Miller.
Welcome to Abroad in America. In today's episode, we are going to talk about taxes in America. We are going to have several episodes about taxes in America because it can be complicated. And of course, it's a big system and it's different than many other systems around the world. But today, we're just going to talk about the progressive tax system, the basic progressive tax system in America. And we're going to break up this tax discussion into several episodes to keep them short and sweet, because I know that you can only listen to a podcast about taxes for just so long. Okay, with that, let's get into it a little bit. So today I want to talk about the progressive tax system. So America does not have a flat tax system like many other countries in the world. There are about 20 countries in the world that have a flat tax system. Most of them are in Europe: Romania, Georgia, Slovakia, Ukraine, Russia, Serbia, Latvia, countries like that. All have flat tax systems. Some people refer to them as regressive tax systems because even though it's the same amount of tax for everybody, whether you make $1, $100, or $1 million, it's obviously easier for people with higher incomes to absorb a flat tax than it is for lower income populations. So some people do refer to those as a regressive tax, but technically that's a flat tax. America doesn't have that. And the reason they don't have that is because of exactly that. People see it as a regressive tax. If you try to tax everybody the same amount, they don't see that as fair, because obviously if you make $1 million and you pay, say, 15% tax, even though it's the same proportion, 15%, still leaves you a lot more money to enjoy in life than somebody who has to pay 15% that doesn't make so much money in the tax world. So we have a progressive tax system in America, like a lot of countries in the world do. So the more you make, the more taxes you pay. So I'm just going to go over the basics of that today. Taxes, like I said, are very complicated. The U.S. tax code has more than 3 million words, more than 3 million more words in it than the Bible. That's how complicated and long the U.S. tax code is. But hopefully in this podcast and other podcasts on taxes, we are going to break it down and make it nice and simple for you in short, sweet bites. Okay. So the first thing I want to say before I get into how the tax system works is I am not a legal tax advisor. I'm a licensed financial advisor, but I don't do tax preparation. I do help clients with tax planning in general. And this podcast is not designed to be legal, investment, or tax advice. It's just to be educational on how the taxes work. If you have a specific tax question pertaining to your situation, I encourage you to get out there and get a hold of a licensed tax professional to talk about your situation and figure that out for yourself. Now, with that said, let's talk about the progressive tax system. In America, the first dollars you earn are tax-free. This is a big benefit in America, the tax-free money that you can earn. It's called the standard deduction. So for every single person that's a taxpayer in America, and we're going to talk in the next podcast about who is a taxpayer in America and how that affects your taxes, both in America and worldwide. So we're not going to get into that today, but every taxpayer in America gets the first amount of money they earn called the standard deduction tax-free. Now, I don't want to get into a lot of numbers, so I'm going to kind of keep this general, but I will use some numbers. So in 2020, the standard deduction is $12,400 per person. So if you're married filing jointly, you can double that, $24,800. That is the tax-free money that you get in America. Everybody is entitled to this that files a tax return and earns income. So you do actually have some money that's completely tax-free in America, the standard deduction, your first $12,400. Now, what happens when you make more than that? Because most of you listening to this have good jobs. You're expats in America. You definitely make more than $12,400. What happens when you make more than this? Well, the next dollar over that $12,400, you start to pay taxes on. And since we're a progressive tax system, there are brackets or slots that you pay taxes on. The more you make, the higher you pay the taxes for that slot or bracket of money. We're going to talk about that here in a minute. Okay. So today, today, the tax brackets are 10%, 12%, 22%, 24, 32, 35, and the most you can pay in America currently is 37%. I'm not going to go through all the numbers that separate each one of those, but there are a certain amount of dollars in each of those tax brackets that you have to pay taxes on at that bracket, which brings me to a big misconception about taxes in America that I want to clear up. Even a lot of Americans get this wrong, and I don't want that to be you. I don't want you to get this wrong and have this misperception. You will hear a lot of Americans talk about their taxes that, oh, I'm in the 24% tax bracket. And they insinuate that they're paying taxes at 24% on all their money. Now, this simply is not true. They're not paying 24%. It's not a flat tax like we've already discussed. It's a progressive tax. This is really unfair to say because maybe that person that's saying that only earned $1 too much that got him into the 24% tax bracket, right? But in this instance, they're only going to pay 24% tax on that $1 that falls in that bracket or that slot. It doesn't mean they're going to pay 24% on all of their dollars. It's not retroactive. You pay 10% tax on the money in that bracket. If you make $1 over into the next bracket, which is the 12% bracket, then you pay 12% only on those dollars in that slot or that bracket. If you make $1 over that bracket into the 22% bracket, then you're only going to pay taxes at 22% on the money that's in that bracket or that slot, right? So it's not a flat tax. It's a progressive tax, and you only pay the tax for those dollars that are in that slot. Now, I've never understood why most Americans like to quote their tax rate by brackets, because you could be $1 into the 24% bracket. You could be $50,000 into the 24% tax bracket. But again, you're only going to pay taxes at 24% on the dollars that are in that bracket. So it's not really a fair way to quote your tax rate by quoting what bracket you're in. There is another way to measure taxes that I'd like to teach you about, and it's called the effective tax rate. And I wish that people talked about their effective tax rate more, because from a financial planning point of view, it's a more apples to apples, oranges to oranges type of way to talk about your tax rate. And what effective tax rate is really simple. It's your average tax rate. So if you get your first chunk of money tax-free, and then you pay 10% on the next chunk and 12% on the next chunk, and say 22% on the highest chunk of your money, if that's the highest bracket you fall into, you can average out what you really paid, right? Some money you only paid 10% on. Some money you didn't pay any taxes on. When you average it all out, we call that your effective tax rate. And for most Americans, they fall somewhere around 14, 15, 16% effective tax rate of what they actually paid on all of the dollars that they earned. This is a fair and equitable way to talk about what your tax rate in America is. And I really wish more people would use effective tax rate instead of the highest bracket that they fall into. So that is how the progressive tax system in America works. I do want to mention in this podcast a couple other taxes really quick that you do have to pay as an American taxpayer, or whether you're a resident alien, a green card holder, American citizen. And on top of the progressive taxes that we just talked about, which are federal taxes that go to the federal government, there are also taxes for Social Security and Medicare. Now, Social Security, everybody has to pay this tax. And this tax goes to the old age pension scheme in America, where when you hit full retirement age, which is 66 or 67, depending on when you were born, you're entitled to a government old age pension for the rest of your life. You can take that money as early as 62 at a reduced rate, or you can wait as late as 70 before you begin taking it, and it continues to grow, of course, the longer you wait. That's our Social Security scheme. Now, as somebody who's working in America, most expats in America are going to be covered by Social Security and have to pay this tax. It's 6.2% of your income, and your employer also has to match that 6.2% of your income. So the total tax is actually 12.4%, but you only have to pay half of it. Your employer pays the other half of it, unless you're self-employed. there is a penalty, so to speak, in America called the self-employment tax. If you do start your own business in America and you're the employer and the employee, then you're going to have to pay both sides of that tax, or the 12.4, instead of just the 6.2 that most employees pay, because their employer picks up the difference. The other tax is Medicare. So old people in America also have a government health insurance plan or scheme called Medicare, and that is a tax of 1.45% to you, and also matched by your employer, 1.45. So the total tax is 2.9, pays for Medicare. And again, if you're self-employed, you have to pay both sides of that. But as an employee, you're only paying 1.45%. Now, these are taxes that you generally can't get out of. The good news is that a lot of countries have an agreement with America called a totalization agreement for Social Security, which eliminates dual taxation for two Social Security. So if you haven't deregistered tax-wise in your home country, you won't be subject, if there's an agreement in place between America and your home country, you won't be taxed twice on Social Security in both countries. I'm going to get into that in more detail in another podcast, but I just wanted to mention it right now. It's also important to know that your time in America, although you cannot claim any of that tax back that you paid into Social Security, you can use those credits to qualify for your old age pension scheme or Social Security in your home country if there is a totalization agreement in place between your home country and America. Now, that's a little bit complicated, and we will talk about that in a future podcast, but I just wanted to mention it here because that's some good news for a lot of people that have an agreement in place between their country and America. Now, state taxes is a whole different ball of wax. Some states have taxes, most do. 43 of the 50 states have state income tax, and seven states currently do not have a state income tax. So depending on where you live, state taxes may be an issue or not an issue. Generally, they work in a progressive manner the same way as federal taxes, but each state had taxes a little bit differently. So we certainly don't have time in this podcast to get into all the taxes for each individual state, but do know that some states do have taxes as well. Of course, there's lots of other taxes in America and every country around the world. There's sales taxes, or VAT taxes, it's called most places around the world, on many things. Some cities even have taxes. So taxes, we talk about it a lot in this. We're going to talk about it a lot in this podcast because it is a big issue in financial planning. The more efficient you can be with your taxes, the better off your financial plan will be, and ultimately the better off you'll be. One of the things I specialize in as a financial advisor is helping people with tax planning. I've never really met anybody that enjoyed paying more money to the government, no matter how patriotic they were, how much they liked their government or their country. Most people I meet, all people I meet, really like to pay the least amount of tax possible. So if that's you and you want to have tax planning in your financial plan, I encourage you to reach out. You can also learn more about all of this stuff in the show notes for this episode, which you can find on my website at Baobab Wealth Abroad. Baobab is like the tree from the Lion King, B-A-O-B-A-B, Baobab, the tree of life, wealthabroad.com. Click on the podcast there. This is episode 2. I'll have some show notes there that have links out to the progressive tax system and things like that. If you have any questions, you can contact me through the website. And until the next show, be well, and don't forget to hit the subscribe button so you don't miss any of these shows where you're going to learn all about taxes and other financial planning issues specific to you, the foreign national in America, the expat living and working in America. Okay, thanks a lot for listening.
Want even more ideas, tools, and resources on how to navigate your financial life as an expat in America? Check out all the resources on Jimmy's website at baobabwealthabroad.com and subscribe to the blog to stay up to date on issues affecting expats. Don't forget to subscribe to never miss an episode. See you next time. Baobab Wealth Abroad is an independent, client-centered financial advisory firm providing comprehensive financial planning services to expats. Securities offered through Intervest International Equities Corporation, member FINRA, SIPC. Intervest International Equity Corporation is registered to conduct business in all 50 states and the District of Columbia. Advisory services offered through Intervest International Incorporated, an SEC-registered investment advisor. Intervest is licensed to sell insurance in all 50 states and the District of Columbia.
This podcast is designed for general education purposes only and shouldn't be taken as legal, investment, or tax advice. You should seek out a qualified tax professional or licensed financial advisor to determine what is best for your personal situation.